U.S.-Japan tariff talks have hit a wall. They've stalled, right? Let's get to the big one, which is U.S.-China. So we've got magnets and critical minerals going. I guess that's good, right? But what I find unusual, especially given this is the most consequential relationship pretty much on the planet, I think we both agree, right? The president's fundamental problems with China, right, which have to do with the trade imbalance, which have to do with the way that they run their economy. Neither of those points have been addressed at all.
You're right. It is the biggest relationship and the biggest problem in the trade talks. I think the one thing to remember is, look, as of now, they've signed a trade framework, right? So we don't have the full details around that. Under that, yes, China is saying that they will allow the export of rare earth minerals, although I'm not sure that's actually started yet. Yeah. And I think what we're struggling with, or what the U.S. is probably struggling with more than people realize, is the fact that while, let's say, Scott Bessent might be out there talking about the fact that they don't want a decoupling from China, he has used the term they want a strategic decoupling in industries that they think are of national interest. Now, currently that involves semiconductors, defense, which is where the rare earth minerals, the magnets come in. But I think the difficulty you have is that if you're negotiating with another partner, in this case China, the definition of what is strategic can change on a daily or annual basis. So from that point of view, it's really not, I'd say, in China's interest either to agree a full-scale agreement at any given point until you know exactly what the rules of the game are.
Indeed. Okay, so that's where we are with U.S.-China. But are you agreed, as a lot of people, more and more people seem to be agreed, that we've seen peak tariffs already? It can't get any worse from here. Or can it, do you think?
Well, okay. I think I would be agreed that we've probably seen peak tariffs from here. Peak uncertainty, however, is not something that goes in line with peak tariffs. The reason I come back to that is, look, we're sitting here today. It's July 2nd. Yeah. We've got to wait till July 9th to see all the other framework agreements, et cetera, that
will it extend, do you think?
If you look at history would say extend and pretend, or it's a question of bring it to a certain level and walk it back, right? Whether you look at the trade deals or frameworks that were announced, look at how threatening to move away from the Canada talks until Canada removes the digital tax equation, or even if you look at what is happening in, just a few weeks ago, people were worried about a Middle East war breaking out. We're going to give them another 2 weeks to discuss, and then suddenly find out the next day they've gone and bombed facilities. So I think that's part of the greater playbook, which is strategic uncertainty, in effect, from Trump, is the way he wants to negotiate, which is keep partners on their toes with the prospect of imminent penalties, massive penalties. But in some sense, the market has begun discounting that, right? Even if you look at the Nikkei, what it's doing today, and you think about the potential earnings impact on companies were Trump to announce a 30% tariff, it's not marking those in. So I think the market is also at the stage where they expect that there will be a ratcheting up of tensions, but the rhetoric will be dialed out and the reality on numbers is going to be considerably less worse than people expect.
In other words, he can't be that crazy, right?
Well, from his point of view, you look at it and say, is it really being crazy? Because what you're trying to do is raise revenues in a certain way to make sure that the budget deficit is under control, make sure that interest rates don't get out of control, and let's not forget, you've got a midterm coming up next year. So the one thing you can't afford as an incumbent president is to make the economy significantly worse, that you lose popular support into next year's election. And I think those are the different factors that the market is trying to price in, which is, yes, we may have peak tariff discussions. We're not going to go back to a 125% and a 250%. But again, the difference of do you end up at 10 or 20 can be pretty sizable, but it depends on all the different loopholes and what carve-outs that you bring in. And I think that's why the market is being a little bit more sanguine by saying, look, even in the past, when numbers have gone up, they have left in exceptions to make sure that things that would strategically damage the U.S., etc., AI tech, are not that impacted. So as a result, the overall earnings impact in the markets may not be as much as what a headline tariff number of, pick a number, 30, 40, 50% might suggest.